Dear traders, welcome. This is a new video series because we have new traders joining our community, and I realized at this stage that it would be a good idea to walk them through the basics up to, let's say, a 1 hour MK web chart that we'll see. And the best way to do that is to really go step by step in one video per topic and to really start from zero, okay? To make it as simple as possible. So if you're an advanced trader using the MK web, the market causality approach, then you don't need to watch this. This is really just for new traders who want to understand what this is about, okay? So today we're gonna look at the dumb money positions, which are shown on the MK web tool. And please understand, so this is a fantastic tool, institutional grade tool, and it's absolutely necessary to have the right tools for your trading. A naked price chart is not enough to consistently trade successfully, despite all kinds of things people try to believe you out there. Anyways, let's get started. Allow me to say that regarding stop hunting, finally traders as a whole have understood that this kind of thing exists. What they have not understood though is that there's also what I call position trading. And this is a big area you need to understand, otherwise you will never understand the actual market structure, the market causality, okay? So what's going on? Let's say this is euro dollar. The price goes up. What happens here? We suddenly have a lot of dumb money buyers entering the market, okay? Buying, thinking, oh, you know what? This market is gonna break out and will continue to go up, so they try to profit. So what happens in the actual forex market? Well, because the longies, as we call them, the dumb money longies, are entering. The smart money algos will push the market down against these dumb money longies, the buyers on the dumb money side, okay? We call this pricing in dumb money position bars, okay? These are dumb money position bars, and the smart money is literally pricing in these dumb money positions by moving the market against them, okay? Now let's look at the opposite scenario. Price comes up. What happens at this price level? We suddenly see dumb money sellers, dumb money shorties entering the market, okay? They assume, you know what? We are on the upper side of the range. The price should come down from here, so we want to sell and make a profit. So what happens in return? You guessed it. Boom. Okay. The smart money algos will push the market, such as euro dollar, up against those dumb money sellers. Okay. They are pricing in the dumb money sellers, the dumb money shorties, by conducting an up move against them, putting them into loss. Okay. Now, Let's look at real life examples as well. Here we go. This is a chart just from now, euro dollar. And actually, so let's even go back another step. Here we go. This is a real life example, okay? We have the dumb money sellers, the red bars, coming into the market thinking they're going to sell down the market. What happens? The market breaks to the upside and takes out these dumb money sellers. You see? What happens if some dumb money longies, some dumb money buyers enter? The market goes down against them. You understand? It's literally the opposite of supply and demand. This is a live chart, by the way. Okay? Now, on the MK web, you see live those dumb money positions currently in the market, and also where they are, at which price level. Okay? This is very important. You see it on the right side of the y-axis where dumb money shorties are placed. You understand? Now, the first histogram shows you the current dumb money positions. The second one shows you the historic plus the current. So guess what? You're able also to see who was in the market and who got kicked out already, like those longies here, you see? Those dumb money longies entered the market, the smart money algos pushed the market down against them, and they're no longer on the market. They took their losses, they got stop hunted. Okay? So the second histogram shows you historic dumb money position plus current dumb money position. First histogram shows you only current DM positions. Okay? Also understand that there is a scale. The MK web shows you what scale we are talking about, and this is very important to understand. Here you see this number 45. Now if we suddenly have a massive position by, let's say, 90, the scale will increase. You see suddenly 90, and visually everything will be adjusted, so you always see the highest dumb money positions well. You understand? That's important to incorporate into your analysis. You see, historically the highest was around 112. Okay, but those ones to a large degree got kicked out, so we only have like 45 left. Now sometimes the market is empty and everything is, let's say, below 20, then it's an empty market. Okay? So understand this first component of the MK web tool. We come to all the other ones in the next videos, but we go step by step. Okay? We're going to talk about stops, we're going to talk about squeezes, we're going to talk about net loss, and so on and so on. But for now, just understand this particular dynamic. Okay? Generally speaking, as you can see from the live chart, indeed the smart money algos will move the price of forex markets against accumulations of dumb money positions. If the dumb money positions are long, they're going to push the market down against them. If the dumb money positions are short, they're going to push the market up against them. Okay? It's essential to understand that. It's not enough to understand stop hunting. It's not enough to understand, let's say, order gap zones and other phenomena. You need to understand this very, very fundamental structural dynamic in the market. So that implies that in forex we do not have a supply and demand architecture. The markets used to be that way. That is over long ago. These days we have the smart money going after the dumb money. Okay? That is the key to understand foreign exchange markets in 2025. And I've documented this for quite some years here on YouTube publicly. The evidence is there. If you're not aware of this, you have a blind spot because you didn't see that evidence. It's here on this channel. Watch it. Thousands of examples, more than 1,000 videos, live trading, everything you can find on this channel you can find nowhere else. Understand these aspects, then you will understand how forex markets actually work. Now in the next videos we're gonna add bit by bit all the other components, so you understand at the end of the day how the machine works overall and how these components interact. But in order to get there you need to first understand each single component. So in the next videos we're going to talk about the stops, we're going to talk about how stops and positions interact, we're going to talk about the different types of stops, we're going to talk about other aspects you can find nowhere else, such as option strike targets, order gap zones. Then we talk about the squeeze market mode versus the range market mode. We talk about how they actually use, or I say abuse, news items to their advantage, and what you have to understand about each of those aspects on a basic level. So I'm trying to keep things simple here, because it's true, if somebody starts to see this work, it seems to be overwhelming and they don't really understand what this is about. It's time to change that and to go step by step. Stay tuned and stay safe.